no sound. How's that for sound? I hit the freaking button. The button didn't listen. All right, got it. How about this? It's Tuesday night. Boomer Tech has been worked out. The stream is already ready to go over on Odyssey. We'll be going over there in about 15 minutes. I even have a link. I'm going to put it in the chat. I know it's really funny. Now the people on Odyssey when they watch this on Odyssey, they're like, where's the stream? I'm like, well, if you're subscribed to the channel on Odyssey, then you should be able to find it. So there's your clue. If you want to watch, everything that I do here, there's 2 streams that happen on Monday nights. There's a 15-minute one that happens on YouTube, and there's a 1-hour one that happens on Odyssey right afterwards. That's the only thing I do on this channel. It's really not that, it shouldn't really be all that difficult. Like if I can manage a microphone and I can manage 2 different streams, you guys can figure out where the freaking streams are. I don't really care. This is my therapy hour. And if you don't like it, well, I'm not changing the way I am. There it is. If anybody else wants to tweet out the thing in the comments, go right ahead and do so. Sounds great to me. So, all right, let's get started this morning. Let's get started this evening. We've got about 10 minutes of commentary, and then I'm going to move forward. So 50 years ago or so, Henry Kissinger went to Riyadh and cut a deal with Saudi Arabia for them to sell all of their oil exclusively for dollars. And in doing so, turn around and take all of their profits that they didn't spend on anything else, on Rolls Royces and, wenches and government function and whatever, put the rest of it into U.S. Treasury bonds, birthing the petrodollar. Well, we've been talking about the end of the petrodollar for a decade. And it really started back in 2012 after Iran was first kicked out of the SWIFT system and sanctioned by Obama. And India bucked this trend then and started bartering for Iranian oil, trading for like washing machines and soybeans and everything else. You can go look this stuff up. I remember the various members of the State Department laughing at the Indians for trading consumer goods and industrial goods for oil. And it was, funny that, Iran's not getting hard currency. Well, no, they're getting things they actually need. They're getting, tractors and plows and, heavy machinery, washing machines, food, seeds, medicine. None of the stuff people actually fucking need. They didn't get currency. Money is far more important. And after writing an article like I did the other day about the difference between inside money and outside money, it was very clear that the petrodollar is a classic inside money style system. That outside goods, outside money, like oil, gold, other things, should only be confined. The trade for them should only be confined with financial assets. And that was the big thing that Kissinger pulled off. To his credit, I guess. I don't know. It created 50 years worth of terrible U.S. policy. It's been nothing but a horrific experiment for the entire world. It's empowered a rapacious and disgusting oligarchy we now colloquially on this channel call Davos. And it's brought us to the brink of World War III, if not in the middle of World War III. So one could argue whether the petrodollar was a good thing or a bad thing. Well, if you're an American, middle-class American consumer who's, addicted to cop shows, pornography, and Cheetos, well, it's been a good thing. And if you're the rest of the world, maybe not so much. So this is where we are today when we find out that the Saudis have finally, after many, many years, the Saudis have finally said, maybe we're going to be willing to take something other than dollars for our oil. That we'll do trade in local currencies, or in this case, we'll do trade in the Chinese yuan. Now, the Chinese import somewhere between 1.5 and 1.75 million barrels of Saudi oil a day. Okay, at $100 a barrel, you can do the math. That's $175 million a day that could be done in Chinese yuan. right? Let's not forget also that the Chinese have a perfectly functional and valid oil futures contract over in Shanghai so that they can coordinate price and time and with producers and consumers. They don't need to go to ICE or they don't need to go to the COMEX or anywhere else to do this. They can go to Shanghai. They can get that done. They don't have to go to Dubai. They don't have to go anywhere else. They can go to Shanghai if they need to. So if they're going to transact in yuan, makes sense that they would then, that Saudi producers, that Saudi Aramco would start putting, that people would start trading against Saudi Aramco oil futures on Shifi. So there's all this stuff going on. I mean, yeah, don't get me wrong. I Megazino, I'm with you on Cheetos. So unfortunately, it's one of my comfort foods. The crunchy ones, not the puffy ones. Fuck the puffy ones. They're just, they're just chemical. They're just like chemically soaked air. It's the crunchy ones that are really good. So so that's where we are today, and this is a major thing. Now, last week the Saudi finance minister came out and said, we're really thinking that we may want to diversify our investments and our oil profits outside of dollars, which was a big signal. It's actually the biggest friggin' piece of news of the last week. Forget everything that's going on in Ukraine. The Russians are going to win in Ukraine. The big news was that, because that's the signal that the Saudis are going to finally depeg their currency, the rial, from the dollar. So the Saudi rial is pegged to the dollar at some ratio. I think it's about 7-1. It's very similar, I think, to the Hong Kong dollar. And it means that the Saudis are, when the price of oil is up in dollars, Saudis make a lot of money. And when the price of oil is down in dollars, they have no flexibility. Their revenues drop proportionally, right? Whereas with the Russian ruble, for example, it free floats on the market. So if the Russian ruble gets crushed, the price of oil goes down, well, the price of the ruble will usually fall versus the dollar, and for the most part, it'll offset. Remember that local costs are paid in local currency. So Saudi oil workers aren't paid in dollars, they're paid in Saudi rial. Just like Russian oil workers and Russian gas workers aren't paid in US dollars, they're paid in Russian rubles. So Gazprom and Lukoil and Rosneft pay their operating expenses in Russian rubles. They do all their accounting in Russian rubles. And then we convert it all back to see how much money they actually made in dollars from our perspective. Because we care about, as American investors, we care about what their profits look like in dollars. Just like European investors would convert the rubles to euros and look at their balance sheets and their income statements relative to the euro or the Japanese yen or wherever you happen to be. Whatever currency you're investing in that you're trying to accumulate, you're going to look at a foreign investment with your currency in the denominator of the forex pair. You're going to do the normalization. You're going to take all the rubles and divide them by the exchange rate of the ruble versus your local currency and then do the math. But if the Saudis are now taking yuan for all that oil, that implies that they're going to launder their profits back into Chinese government debt, not US government debt. Now, if they were to post everything they were to do a lot of their trading over on Shifi, the Shanghai Futures Exchange, then they could also lay off that contract with a gold future and actually settle in gold. Okay? So is it the birth of the Petro Yuan or is it the birth of the Petro Gold contract? It's a good question. We already know that the Petro Euro is out there. The Russians have been taking euros for their oil for years now. We know that the Russians have been selling a lot of their oil for rubles as well. We also know that the Indians have been paying in rupees, and we know that the Turks have been paying in Turkish lira. So the petrodollar as a concept has already been slowly dying by a death of 1,000 cuts. And as I go back to my original comment, which is to say that this process started when Iran started trading for washing machines and soybeans and tractors and all this other stuff back in 2012. that you take a small amount of money out of that system, and that's money that's not being laundered in dollars. And so now the flow of dollars relative to the stock to flow ratio of dollars through the global financial system, through the global trade system, lowers, goes down. And now financialized markets and asset prices are all built as a multiple of commodity trading, right? And so why the petrodollar is so important is because it's effectively the M0, the base money of global trade. It's the M0 of globalized trade. And if that is going to splinter off and the dollar is no longer going to be 70% of global trade, well, what does that actually mean in the long run? Well, it means that, all these dollars that we're printing in order to run our budget deficit have to go out into the world and command a higher rate of return to offset the risk of holding them. The demand for dollars goes down, so therefore the rate of return, the interest paid on dollars, has to rise. Why the Federal Reserve is going to raise interest rates tomorrow. Part of the reason why they're going to, but there's many other reasons why which we'll get into when we get over to Odyssey in about 5 minutes. So, and again, for those of you who are, trying to figure out where we're going to go in 5 minutes, there's the link. It's in the chat as of right now. Okay. So these currency pegs are always going to fail. When the Swiss pegged the franc to the euro after the financial crisis of the sovereign debt crisis of 2011 to try and stabilize the euro markets, we knew it was eventually going to fail, and it failed in spectacular fashion overnight. The Saudis are actually trying to do a soft depeg here by saying, look, we're just going to start taking yuan for some of our oil trades, and we're going to start building yuan up as and Chinese government debt up as part of our reserves, and we'll just start diversifying away from dollars, and slowly but surely we'll get to a different, we'll get to one, a different exchange rate versus the dollar, and two, a different proportion of our reserve holdings will be in something other than U.S. Treasuries and gold, because that's pretty much what the Saudis own. They own U.S. Treasuries and gold. So, there you go. Like, this is a big deal. Okay. And this is a very big deal because it's now going to change the way dollars flow around the world. And I know some commentators, and notably Martin Armstrong, says this is not a big deal. That the petrodollar is not very important because, there's $45 trillion a day flows through the Forex markets. Sure. Or however, whatever the freaking number is. And that the oil trade is, a percentage of that. Yeah. So what? Yeah, it is. But you well know that the amount of financialization and the value of assets is based on a very large multiple of that oil trade. And that multiple is based on, one, the continued confidence that the United States can maintain some relatively decent purchasing power of the dollar, meaning inflation has to be under control. It means we have to be able to continue to export inflation. Not doing. Now, we've got commodity cost push inflation thanks to the corona apocalypse, as opposed to demand pull inflation from any kind of global recovery. And so what does that ultimately mean? Well, we're going to discuss that in a little bit more detail when we go over to Odyssey. But what's important to understand is that we are coming to the end of the ability for us to lever up the amount of dollars that flow around the world, which is the source of our financial power and the source of our sanctions power. And that's why the Saudis making this announcement, and then also announcing that that China's going to build, they're going to operate, and the Russians are going to fuel a new oil refinery outside of Shanghai or Shenzhen, wherever it was. It was a big $10 billion deal they announced yesterday. Understand that across the entire Middle East over the last 5 years, major oil and gas deals have been made without the use of the dollar, and between countries like Saudi Arabia and China, between China and Iraq, China and Iran, Russia and Iran, and others all around the region, India and and Russia. All of these countries have already laid all the groundwork for this localized energy trade that doesn't need dollars. The Saudis are actually late to the party. They're kind of all right, well, the petrodollar is dead. Now let's, it's dying. Now let's just kill it. It's not dead because the United States still imports a lot of oil. But it's not the same system that it was ages ago. And it also means that we're going to go through a nasty bout of dollar credit contraction. That's what de-dollarization actually means. Because once that truly reverses itself, once that expansion of credit starts to contract, once people pay off those dollar-denominated loans that they've all written versus their trade balance, their reserves and everything else, once those dollar-denominated debts are paid off, they're never coming back. Places like Turkey, they're never coming back. Russia, they're never coming back. China, they're never coming back. Okay? Why? We just proved to everybody that there's significant political risk for holding any kind of debt and holding any kind of investments overseas in dollars because we'll just steal them from you or freeze them. With that thought, let's pop on over to Odyssey. One more time with feeling into the chat. There it is. So that's what I've got for you now. In about 5 minutes, we're going to start up on Odyssey again. And then we'll do that then. And then both of these streams will be available on Odyssey later this evening. You guys be well. You take care. We'll talk soon. For those of you who don't want to follow me over to Odyssey, that's fine. This is enough of me. Great. You guys be well. We'll see you next week.